Good evening. Welcome to our exciting webinar on how to secure financial aid and scholarships. My name is Erin Drysdale, CEO of Granted For You, a scholarship matching company. Tonight's presenter is Dale Schaefer from EMS College Planning. Dale comes from a background of financial planning and has been working with many families over the years to help them reduce their college debt. Welcome, Dale. It's great to have you as our presenter this evening. Myself and our guests are excited to hear how to navigate through the process of financial aid and scholarships. I'm confident that you can guide our participants through this undaunting process. So again, thank you for being on our panel and being our guest speaker, and I will turn it over to you.
Well, thanks a lot, Erin, and welcome to your guests that are on the line. I'm frequently asked why I take the time to fill in the FAFSA form. And here's what I generally tell them. With college debt at an all-time high, keeping in mind that it's over $1 trillion, which is greater than the combined credit card debt of this country, completing the FAFSA can unlock the door for potential grants, aid, and scholarships. The more of these that a college-bound student is able to obtain, the less college debt they will have upon graduating from college that has to be repaid. The FAFSA form can be filled out online after January 1 of any year, and it's good for the school year beginning July 1 of that year through June 30 of the next year. Now keep in mind that you must reapply for aid each award year by completing and submitting a FAFSA form. Federal deadline for online applications is midnight Central Time, June 30, for the school year being applied for. However, in a word of caution here, there are also state guides and deadlines that can vary from federal guidelines. So you really have to check with your particular state or contact our office for details. Once the FAFSA is filled in, the student will get an SAR, which is a student aid report indicating how much aid he or she will get. Note, and underscore this, you will need last year's tax information to fill in the FAFSA form. And you have to know what are countable and non-countable assets to get your projected EFC. Very few people, if any, are going to have their previous year's taxes done by January 1. So it's okay to enter the prior year taxes and adjust amounts later. Keeping in mind that award packages are based on first come, first served, and there's a limited amount of funds available. So that's why it's important to get your FAFSA done in the month of January. A word of caution, however. There are websites available on how to fill in the FAFSA, and there is a 70% error rate. This is not the percentage of forms turned in without the proper information. That is the percentage that are submitted absolutely wrong. When you factor in those that don't even complete the FAFSA, which is the single most frequent mistake and the most costly, because families mistakenly believe that they won't qualify for aid based on their income. It is abundantly clear there is a genuine need for education about the form that is a gateway to billions of dollars of financial aid. This is not only a lost opportunity cost, but thousands of extra dollars that a family doesn't have to spend. Another false assumption is families think they qualify for financial aid because of lower incomes and fail to plan otherwise. You need to contact our office for a more complete list of common mistakes, if you so desire to have that list. Next. Getting the most value out of college will depend upon how you choose a college and a career. The majority of students go to college without knowing what they want to do for a career. They find themselves on the 5 or 6 year plan. And you're going to say, well, I've never heard of that. And I'm going to say, well, sure you do. The student goes to college not knowing what they want to do for a career. They go because it's where mom or dad went. Boyfriend or girlfriend goes there. It's a party school, and many other reasons. Frequently, they change colleges for various reasons. So instead of a 4-year degree, it's a 5, 6, or 7-year degree, and the most expensive year will be the last year. Now, how can you as parents be reasonably sure that your son or daughter will graduate in 4 years? Well, let's approach going to college from a different perspective. The first thing you need to do is consult with a certified college planning relief specialist who is well versed in the college planning process. One of the first things you will learn is to choose college in a different manner. You will learn to choose a career first, and then the subject matter that will support that career, and then choose a college or university that will support that subject matter. This approach will give you a higher chance of the student graduating in 4 years and in a career that they will be most happy with. This is accomplished through a personality test. Most personality tests only cover 4 to 6 personality traits, whereas the one we use covers 77 different personality traits, which will give a much higher probability of a student going into the right career. Now, Tuition Rewards College Savings Program is another aid program, and that is based on participating students in private college. Participating families are guaranteed future discounts up to 1 full year at a no-cost tuition. Contact our office for details. Next, what is aid and how is it determined? Aid is the amount of money, which we call a need, between what the EFC, which is the expected family contribution, is, and the COA, which is the cost of attendance. So we simply take the cost of attendance, and then we subtract the EFC. The result is the need that a family needs. Keep in mind that colleges use different formulas depending on whether they are private or public. Now, after taking a percent of the need based on the formula, the result is unmet need, or what we call the gap. This gap is added to the EFC, giving the family a total annual out-of-pocket expense. When considering financial need, colleges and universities also include such factors as books, supplies, personal expenses, personal computers, and campus transportation, to name just a few. Now, parents typically don't factor these into their cost of college thinking process. Met need can come in the form of loans, grants, and scholarships. And this brings us to the question, did you know that a private college or university can be less expensive than a public college or university? An aid eligibility comparison report will show your calculated expected family contribution, which is your EFC, and the award history of different colleges in a head-to-head format. It will also forecast your out-of-pocket expenses at each college. This report alone could save you thousands of dollars in false assumptions about the true cost of college. Additional reports can include a detailed EFC projection and a what will college cost estimate report. Also, changes in a family's financial structure may result in greater financial aid eligibility. Now, changes meaning maybe there's been some medical problems, maybe there's been death in the family, something of that nature. A what-if analysis will show how a specific change may impact financial aid eligibility. This report will demonstrate the value of the recommendations and can allow you the opportunity to make more informed decisions. Finding out the award history of a particular college being considered is very important. Typically, this information is not readily available from the college. While an internet search may reveal this information, it is readily available from our office. Next, learn the 3 E's in financial planning for college. First, you must educate yourself. Then you have to evaluate, and then you have to execute. You need to educate yourself about financial aid, evaluate where you are financially, and where you want to be after your children's college year. And keep in mind, and remember that you can borrow for college, but you cannot borrow for retirement. Then you need to execute a logical and realistic plan for your immediate, short-term, and long-term money goals. Parents need to know why career and college selection is paramount when planning to pay for college. Changing majors or colleges can increase the number of years spent in college. This can increase the total cost of college and delay income from work. Now, there are two primary steps in the evaluation process. Determine your family category for aid and your initial EFC. This stage also includes several key financial analyses: cash flow and retirement. Cash flow is important in determining how much of your income can be used to pay for college. Projecting your needs for retirement will help you determine what assets, if any, you can pay for college without jeopardizing your retirement. You can contact us for further details and have a go ahead. After completing the two steps above, are you ready to execute a successful college plan? This plan should include choosing a career path, the college selection process, defining yearly cash flow resources, loans, evaluation, and comparing what type of financial support each college is offering. Next, one of the keys to getting scholarships is for the student to treat it as a part-time job. And I'm curious about this. In order to really understand about scholarship, you really have to do the homework and really dig into it. And you need to keep a journal. And that way you'll be able to compare notes and evaluate what you're doing as far as you're doing research. So it's going to take a lot of hard work to thoroughly research what scholarships are available and then aggressively apply for dozens of them. A good starting place might be local organizations or associations. Maybe you know somebody that's in business. Remember, employers of family members. They may have scholarships available. Some churches or religious organizations do. Maybe teacher associations. And don't forget fraternal organizations. Scholarships are also provided by corporations, each with their own qualifying factors. So keep in mind that scholarships may also include merit, financial need, ethnicity, or major. Ideally, when a student is looking for a career, he or she should spend a day or two shadowing someone in that prospective career. This is something that maybe they can do during the summer. Maybe it's something they can do after school. But if whatever they think they might want to go into, they need to contact an employer in that particular field, maybe through the HR department, and see if it's that they can come and volunteer and just follow somebody around so they can sort of get the ins and outs of that particular career. Remember, it's also just as important to eliminate a prospective career as it is to embrace a prospective career. There are literally thousands of grants and scholarships available. Finding the right ones is where our office or Aaron can help. Okay, now you have a scholarship. Where are you going to apply the funds? And this is something that a lot of parents do not know, and I doubt that the aid administration officer at the college is going to tell them. How will you use it? Will you use it to reduce your needs that we talked about earlier, or your EFC, your expected family contribution? And it usually will benefit the family better if it is applied to the EFC. And word of final thought. It's certainly possible for parents and students to apply to colleges on their own. However, with the help of a college planning specialist, their chance of success is greatly increased. College cost increases at a faster pace Aaron, that's what I have for your guest this evening. I'll try to answer any questions anybody might have.
Thank you, Dale. We really appreciate it. Thanks for all your information. That was great. As you guys just noticed, I messed up the screen. Sorry about that. So we will go forward and catch back up to where we should be. Again, thank you for not only Dale presenting the seminar and the webinar, but for everyone who attended. Now, we have some questions that came through, Dale, while you were talking, so everybody feel free to stay on the line. Dale, I'm going to get you to answer 3 or 4 questions, and then there's a bunch more, but we can stay on and talk about them after the webinar is over, so everybody can stay on, or you can get the recording and you can hear them from there. Again, if you have any questions after this webinar, please feel free to contact Dale Schaefer at info@emscollegeplanning.com or visit his website at emscollegeplanning.com. All right, so Dale, the first question I have is from Mitch from Sarasota, Florida. He says that earlier on you mentioned the college debt. Can you tell us a little bit more about it, and does it differ from other debts that people have?
Well, that's a very good question, Aaron. And yes, it can differ from other debt. And one of the main things, and this is not that everybody would do this, but you don't know what happens down the road. You don't know if it happens at the economy. But in current debt or regular debt that you might have, credit card or some other type of loan or something of that nature, and you got into some financial straits, you could file bankruptcy and discharge that in bankruptcy court for the most part. However, you got to keep in mind that college debt, federal debt, is not dischargeable. So no matter what you do have to pay that. Even though they might work out some sort of a payment schedule, even if you pay. And there are other programs out there that after you graduate from college and you've been paying on your debt and you get down the road 15 or 20 years, they do have some programs where that whatever's left is discharged.
Let me see. Tanya from Lansing, Michigan says, as a parent and visiting potential colleges with my daughter, how can we evaluate them before deciding on which one to choose?
Yeah, that's really good, because you really want to be able to compare apples with apples or oranges with oranges, not apples to oranges. And what College Planning Relief has come up with is a evaluation form. We call it CVS, College Valuation System. And there's about 20 or 25 criteria on here. But for example, it also scores it. So no matter what college that you go to, you'll be able to score it, and then you'll be able to come back and at your leisure, compare the scores and evaluate the colleges, and it give you a better evaluation. But for example, you might want to score the academic program atmosphere, the campus location, the campus size, computer availability, academic counseling. What are the extracurricular activities? What are cultural opportunities? Faculty teaching reputation, housing, and here's an important one, food. You would want to certainly taste the food. You'd want to go visit the dorms and just get an idea of what the dorms look like, whether they have bunk beds or single beds, things of that nature. Do they have any internships? And the list goes on. So and this is something that is available from our office as well.
Perfect. Thank you. I'm going to do 3 more, I think. So let's do Esther from Bloomington, Indiana says, can you describe in a little more detail about the aid eligibility comparison report.
Yeah, sure. What an aid comparison report does, it takes maybe 4 or 5 colleges, and we can do more, but typically a young person will, maybe they've got 5 colleges on their thinking process of where they want to go to, and we're able to put on one sheet things like the percent of freshmen that return to that same university. As a parent, or even as a prospective student, I would want to know that if there was 100% of us started today, what percentage is going to return for the sophomore year? And another thing I'd want to know, what's the percent of students that graduate from that same university in 4 years? I would also want to know what sort of aid does that particular university get. So what this aid comparison report does is that, now, you can get this information off the school's website, but you've got to go through pages and pages and pages. What we do is put it on one page, and you can look at it and get all this information in right side by side. So it does give you some very valuable information.
Okay.
Do you have any other questions here, Aaron?
I'm here. I'm right here. So that's really good to know as well. And then, let me see. Amy from Chicago, Illinois, she wants to know, how can a private college with a higher cost of attendance be less expensive than a public college with a lower cost of attendance?
Great question. All right, so what we have to know is, how are private colleges funded and how are public universities funded? Private colleges or universities are funded through endowments. There's no public money going in. These are monies that, somebody graduated from the college many years ago, and, maybe they had $2 or $3 million laying around they didn't know what to do with, so they just donated it to the college. Whereas public universities or colleges is their tax dollars. That's mom and dad's tax dollars going into that pot. So with a private university, and earlier we talked about unmet or need and unmet need. You can go, maybe the need at a private college, they might fund 90% of your need, and then you only have to worry about 10% of the balance of it. Maybe they would do 100% of the need, and they can afford to do that through this endowment money. Whereas the public colleges, maybe they would only meet 50% of your need, and you got to come up with the other 50% through some sort of a work-study program or some other method of money. So when you go through all the process of figuring all this out, we can mathematically show the people in your audience how a private college that has a higher cost of attendance can be less expensive than a public or college or university.
Excellent. One more question. Let's see. Carl, he's from San Diego, California, and he wants to know more about getting the best value, he says, depends on the college and the career chosen.
All right. Well, what we mean by that is, and we talked about it briefly before, you want to get your son or daughter in and out of college, presumably in that 4-year time span, and with the least amount of cost. So And we also talked about using a personality test to discover what career that your son or daughter may want to go into. And it may be totally different from the one that mom or dad would like for them to go into, or maybe they think that they want to go into. So it's crucial to understand what their makeup is, what we call their wired programs, because people are wired for certain things from infancy. And so it's important to understand that. So once you understand what that is, then you can figure out what career might best suit your personality. And like we talked about before, you better choose the right subject matter and the colleges and universities that would support that. That's what we mean by value. That way, you're not on that 5, 6, or 7 year plan. Any other questions there?
No, there's a few on here, but I think we'll address them differently, and you can send them emails or whatnot. And if anybody else has any more questions, please feel free to email Dale with any of your questions. I just want everyone to know that's participating in this webinar tonight that it is never, ever too late. Even if your child is a junior or a senior in high school or is already in college, it's not too late to contact Dale to get more information on how to save money right now for college, because, again, saving money for college also helps you save money for retirement, because the more Dale can help you save for college, the more you're going to actually be able to save for your retirement in the end. So, again, for more information, you can contact Dale at info@emscollegeplanning.com or go directly to his website. You can request time with him. And I'd like to thank you all for participating tonight. Have a great night, and please check out his website.